Welcome to our presentation on the accounting standards and practices of Russia, presented by Caitlin McDuff, Shannon Stetzel, and Michael Lasseline. First off, we will discuss the topic of economic structure.
Natural resources account for much of the economy. Some of its major natural resources are oil, natural gas, precious metals, and its forests. Russia's natural resources account for 30% of the world's natural resources, totaling approximately $75 trillion. Russia is the number 1 exporter of natural gas, number 2 in coal, and number 8 in oil. It is also the largest producer of diamonds. Although Russia is the largest forested country in the world, it only accounts for 4% of the world's timber exports.
Next, we will discuss the cultural environment.
The official language spoken in Russia is Russian and is actually the only language spoken by over 81% of the population. The current population is about 146 million, but that is declining due to economic and social uncertainty. Currently, 19% of the population are considered minorities. 78% of the total population live in European Russia, which lies between the Ural Mountains and Ukraine. There have been major changes where Russians reside. Starting in 1917, 80% lived in rural villages. In 1996, 73% have moved to live in urban communities. It's also not unusual for 2 or 3 generations to live together, and currently over 50% of the population live on assistance from the government.
Our next topic will be social structure.
The social structure in Russia is one of massive wealth inequality. A study conducted by the Swiss bank Credit Suisse shows that the wealth inequality between the country's regular population and their super-rich population is the highest among any major country in the world. It is estimated that 0.000008% of Russia's population control 35% of the country's wealth. This roughly translates to 110 people out of the country's total population of 143.5 million. The study goes on to say that worldwide there is 1 billionaire for every 170 billion US dollars in household wealth. However, in Russia has 1 for every 11 billion. Additionally, 94% of the nation's population is reported to have less than $10,000 in net assets. Russia's president, Vladimir Putin, estimated wealth is between $40 and $70 billion. According to a study conducted by Forbes, the number of billionaires that Russia has increased from 0 in the year 2000 to the current number of 88. The population in Russia has declined by nearly 5 million since 1991, and a large portion of this decline is due to suicide. In a study conducted by the UN, it is reported that 0.22% of the nation's youth commit suicide compared to a worldwide average of only 0.07%, and that the suicide rate amongst teenagers in Russia is near the top in the world. It is estimated that Russia's population will shrink from a current day level of 143.5 million to between 121 and 131 million by the year 2025.
Next up, we will discuss the political environment.
Russia's political structure is defined as a federal presidential republic with executive power split between the federation's president and prime minister. The nation's current president, Vladimir Putin, has served in office since May 7, 2012. The federation's current prime minister assumed office on May 8, 2012, and also served as Russia's 3rd president. The current term length for president for Russia is 6 years. This was increased prior to 2012 when the term length was only 4. The regulation mandates that a president cannot serve more than 2 consecutive terms, however, is allowed to serve more than 2 terms non-consecutively. The election system is set up as a 2-round system. The first round features candidates from a number of Russia's political parties, and if a candidate does not win by an absolute majority, defined by over 50%, then a second round of voting is held with only the 2 highest voted candidates from the first round of voting on the ballot. Serving under the president is the Federal Assembly, which is made up of the State Duma and the Federal Council. The State Duma is comprised of 450 members serving 5-year elected terms, and the Federal Council has 170 members. These 170 members are comprised of 2 delegates sent by each of the Federation's 85 federal subjects of Russia. The federal subjects of Russia are comprised of geographic territories as well as 3 major cities.
Next, we will be discussing the entrepreneurial practices. During the late 1980s is when the popularity of entrepreneurship and small businesses started to take place in the Soviet Union. The late 1980s was a time of economic reconstruction where changes had been made in the Soviet system, and this enticed more individuals to launch entrepreneurial activities. The Soviet system had always been based largely on technological prestige and bureaucratic planning. Performance and growth potential of small firms in Russia is based mainly on their social capital and network relationships, their intellectual capital, and the human-based resources available. These resources are considered to be non-material resources and are important in fostering entrepreneurship and overcoming obstacles in the transition market. Financial problems and governmental restrictions are the majority of obstacles that Russian firms face. An overall positive change has occurred in entrepreneurship and small business in Russia. However, it seems that their business environment is still highly unstable. Some of the growth restrictions of Russian firms include environmental and institutional instability, high interest rates, inconsistent regulation and laws, the mafia, and corruption. With such a highly unstable business environment, this can lead to many unregistered entrepreneurs, which is the case in Russia. Therefore, it seems that the own Russian government is the major factor concerning most business growth. At 53%, the majority of Russian firms are considered small, and at 12%, a small minority of Russian firms are considered large. The highest ranked business sector for a Russian firm is wholesale at 30%. Location-wise, firms seem to be pretty spread out throughout each region. The highest ranking of business environmental obstacles for firms is tax rates at 36%. The lowest ranking of business environmental obstacles for firms is custom and trade regulations at 2%. The most common type of a legal entity formed in Russia is the limited liability company, where 92.4% of firms chose this entity. This legal entity seems to be the most popular since its registration process is quite simple. The percentage of Russian firms with a legal status formed as a sole proprietorship is 1%, while partnerships and limited partnerships formed in Russia are at 0%. The percentage of Russian firms with an internationally recognized quality certification is 12.6%. The percentage of Russian firms having their own website is 64.6%, and the percentage of Russian firms using email to interact with clients or suppliers is 95.1%. The days it takes to obtain any license or permit is almost double the amount as all other countries. Russia's innovation gap dropped from 2% to 1% from 1990 to 2000. The main cause of this innovation gap is that during this time the Soviet system changed after an economic reconstruction. Our next topic will be the procedures for developing accounting standards. The Russian accounting standards are regulated on 4 different levels. The highest level is the accounting law, the State Duma. The second level is where the accounting standards, known as PBUs, are issued by the Russian Ministry of Finance. The fourth level of regulations would be the rules that the company or entrepreneur establishes within the framework permissible by the government regulations. The Ministry of Finance issues the accounting standards. These standards are largely based on IFRS, with each new standard and amendment aimed at bringing RAS closer in principle to IFRS. The Ministry of Finance also issues instructions for these applications in specific situations of these accounting standards. Under current IFRS, primary users of financial statements are considered to be investors and creditors. However, the primary users of Russian financial statements are the tax and other state authorities, rather than the third parties or even management. Russia's adoption of IFRS was finalized in the year of 2012. Therefore, some changes have been made in regards to filing of financial statements with standards followed, with including the IFRS financial statements and the RAS standalone statements, in which we will discuss these later in the presentation. Next up, we will discuss the accounting measurements and disclosures. The accounting measurements for assets are fairly similar between RAS and IFRS. One of the main differences between the two standards is a reflection of the finance lease. The accounting measurements for liabilities in Russia are measured at a historical cost, while internationally there are several possible measurements, including the present value measurement. The definition of liabilities also differs between IFRS and RAS. The main difference in this definition is the boundaries of estimation. The accounting measurements for equity include differences in measurements and composition of assets and liabilities, as well as a difference in the distinction in the structure of equity itself. The accounting measurements for income and expenses differ between revenues being recognized at fair value of expected or received compensation per IFRS, discrepancy between the times of recognition of income or expenses per IFRS, and their differences in boundaries of income and expenses per IFRS. Impairment, unlike IFRS, is absent in RAS. Professional judgment includes classification, measurement, timing, and method of recognition in disclosure and financial reporting. Professional judgment is used in both IFRS and RAS. Our next topic will be on tax structures. The corporate tax rate in Russia was 24% during 2006 through 2008. 2009 and after has remained at 20%. This corporate tax rate of 20% is one of the lowest among major economies. The lowest corporate tax rate is 15.5%. This amount consists of 2% payable to the central government and 13.5% to 18% payable to the regional governments. However, regional governments have the right to reduce their portion of the corporate tax rate by 4.5%, which brings it down to the 15.5%. The personal income tax rate in Russia for residents has remained at a constant 13% for the last 12 years. Dividend withholding tax rates are 13% for residents and 15% for non-residents. Interest and royalty withholding tax rates are at 20%. Russia has signed a number of bilateral double tax treaties which offer protection against income being taxed in 2 or more countries. If a foreign company is a tax resident of a country who has a double tax treaty with Russia, that company has the right to elect to become a Russian tax resident unless stated otherwise. Next, we will be discussing inflation. The inflation in Russia over the last 10 years was at its lowest in 2012 at 4% and at its highest in 2015 at 17%. Now we will move on to the major sources of influence on accounting.
There are several major sources of influence on accounting in Russia, possibly the most important being the rule of the Communist Party for almost 60 years. This ended in the 1990s with the collapse of the Soviet Union. This made a change in the economy from a centrally planned economy, which is basically state-controlled from every part of production to consumption, to a market-based economy, where it's more of a capitalist society based on the market needs. There are 2 main reporting standards that influence accounting in Russia, the first being IFRS, which was adopted in 2012. This is recorded for all companies that are listed on a stock exchange, that are financial institutions, insurance companies, or pension fund companies. The other is the Russian accounting standards, otherwise known as RAS. This is required for all Russian companies, so there is a lot of dual reporting if the other companies are listed on with IFRS also.
Next, we will discuss the unique features in accounting profession.
Russia has several unique features when it comes to the accounting profession. One of them being that it allows LIFO with RAS, but is not allowed under IFRS. Also, the main focus for the financial statements with RAS is the state government or tax authorities, unlike IFRS, which is more your investors and creditors. As you can see, the financial statements between IFRS and RAS are extremely similar. The main difference is that RAS does not require a stockholder equity statement, but it does require an audit opinion for specific companies. Also, for under RAS, the balance sheet requires 3 years of reporting instead of just 2.
Next up, we will discuss where Russia should fit in the Gray's accounting values model.
On the graph shown, we see the scores Russia has been given in each of the categories under Hofstede's cultural dimensions. A low score of 39 in individualism means that the Russian people are collectivists and care more about the group than the individual. A score of 93 in power distance points to the massive wealth and power inequality amongst the population. Scoring a 36 in masculinity classifies Russia as a relatively feminine country, or a country in which standing out from the crowd is not viewed as a positive. Russia's 95 in uncertainty avoidance shows that they value certainty and preparedness. Russia's culture is one that aims to avoid unknown situations. Russia's culture is also centered around a long-term vision, and they have a strong drive to invest and save financially, as shown by their high score in LTO. Lastly, their low score of 20 in IVR shows that they have a culture that views indulgence as taboo and tend to be pessimistic or cynical. On this slide, we see that Russia's cultural dimensions are nearly opposite that of the United States. Gray's accounting value model is based on the relationships to Hofstede's cultural dimensions and is used to show how a country's culture influences its accounting methods. Using the information that was listed on the previous slides, we can see that Russia ranks in these four categories. Under Gray's method, we can see that Russia's profile is statutory control, conservatism, uniformity, and secrecy. Interestingly, we can list EIFER's favorable profile as professional, optimism, flexibility, and transparency. In comparing Russia's profile against EIFER's favorable profile, we can see a stark difference and ultimately see the two as polar opposites.
Our next topic will be the key accounting standards and practices.
As previously stated under RAS, entities are always required to include a third balance sheet in their reports. RAS entities also must classify expenses under function as opposed to nature, however should also detail these expenses based on their nature in appendices. RAS still allows for the reporting of extraordinary items and requires that they are listed as a portion of other income or other expenses on the company's statement of financial practices. As you can see, these three instances all differ from the regulations under US GAAP and IFRS. Finally, RAS also allows for revaluation to be applied to assets requiring revaluation on current value on a regular basis. While revaluation is also allowed under IFRS, it is not allowed under US GAAP.
Next, we will discuss the plans and efforts to adopt IFRS if IFRS is not adopted yet. With the adoption of IFRS by Russia in 2012, this meant that certain entities were required to use IFRS for financial statements, in addition to the standalone statements under RAS. All other entities are still required to prepare standalone financial statements under RAS. Progress is being made between the convergence of IFRS and RAS. However, there is still a great deal of differences in recognition, measurement, and presentation that needs to be reviewed further before this can be done. Our last discussion will be on the degree of acceptance of IFRS with issues or problems. With the breakup of the Soviet Union in 1992, in which Russia had undergone radical changes to shift from a centrally planned economy to a market economy, this had caused a shift that the accounting policy had to reflect a shift in process for accounting, from a system of state economic administration to a process of the private business community. This posed a problem for the traditional accounting system, as a shift also had to occur in regards to the end use of accounting records. With the new market economy, financial reporting had to be put in place that satisfied the requirements of investors, creditors, and other interest holders. This contrasted to the previous state system. The main issue with the convergence of Russian accounting standards with international financial reporting standards arises from the fact that the accounting principles still favor the tax authorities as the primary user of the information. This happens to be the exact opposite of IFRS' basic root principles, in that financial and accounting information should produce specifically in the primary interest of accuracy and fairness towards the investors and creditors. Thank you for listening.